Hi everyone, hope you're all doing well. Today I'm going to talk about a brand new stock I have started buying. So I started buying this stock last week. They reported earnings and I thought the earnings were really good, but yet the stock went down 10%. And I went, you know what, I'm going to start buying this stock here. So I want to tell you which one it is in case you haven't guessed from that clue there. But it's a US stock. The first time I bought a US stock for a long time. I think maybe the last one I started buying was Adobe. So it's quite rare I start buying a lot of US stocks at the moment. I've been seeing a lot more value in the UK side, but this was the first time that I saw a US stock get to pretty attractive levels, and I thought, you know what, I'm going to buy it here. Although I did actually buy, funny enough, two new US stocks last week. So this is one of them. The other one is a bit more of a turnaround play, and I'll say that one probably towards the back end of next week. But today we'll focus on this stock that I have started buying. Now, before I do get onto the stock, just to give you a little bit of a shout out, if you are on the Patreon, I did just drop an exclusive video, which is a review of SoFi's earnings, which were incredible, 10 out of 10 earnings, and also a little bit of a mention of Visa's earnings and how much upside can be left up on SoFi from here. We're already up around about 200% on that position. Can the run continue in the next few years? And as well as that, if you do want to start investing, join eToro with the link in the description. On there, I have my popular investor program, and I am currently up 33% for the year compared to the S&P's 6%. So we're outperforming the S&P this year by over 5x, which is pretty good going. So without wasting any more time, what is a new stock I started buying? Well, if you didn't get the clue that I gave you at the start of the video, it is PayPal. I have started buying back into PayPal. I was previously a shareholder of PayPal. I started buying as the stock dipped in 2023. And then the stock had a pretty decent 2024 actually. If you look at 2024, the stock was actually up around about close to 40% in 2024. During that time frame, I decided to lock in my gains. I had two positions. I locked one in for a 20-something% return and the other one for a 40 or 50% return. So for about a 12 months period of holding, I was really happy with that, to be fair. I was planning on holding it longer than that because I do normally hold stocks for 2 to 5 years, but the stock had just gone up so much and I was actually seeing a few concerns around the business. Now, I'm not going to go into all of them today, but if you do want to see what my concerns were at the time, I'm sure you can go watch the video. I will try and mention a few of them today as the video does go on, but with the latest updates, I've actually seen a few of those concerns start moving away from the business. And the other thing is that the stock has completely crashed so far this year. The stock is down 21% year to date, where the S&P is up 6% year to date. So PayPal at the moment has significantly underperformed the market. And I actually think now that it's gone to these levels again, it's actually quite attractive. And as well as that, I think the company is back financially, actually improving back into the right directions here, which is made it an interesting opportunity. So I'm glad I sold previously, sold at exactly the right time, and now I think it could be another opportunity to go in here for PayPal. So with PayPal, I don't think it needs any introduction. I think most people have a PayPal account, but it's about what PayPal is starting to do here. They've got a new CEO, and the new CEO, in my opinion, is starting to get things moving in the right direction. There's still things that I think he needs to work on, but overall the majority of the things are starting to move up in the right direction, and I thought the latest earnings were actually a good step in the right direction for PayPal. So when they reported their earnings last week, we could see here the EPS was a nice beat, as you can see. Revenue as well, back up at 5% growth. Now that was one of my concerns, that revenue growth had been slowing down in PayPal. We are starting to see an acceleration again, which is good. Now the big difference to where I was previously to where I am now is I previously forecast like 8-9% growth in PayPal, and they went all the way down to 2%. Now they're starting to move back up in the right direction to 5% growth, and 5% growth at this valuation, I think PayPal can have a lot of success with. I'll kind of show that into a little more detail when I run the numbers on the stock later at the end of the video. As well as that, the company also increased the guidance. So the stock actually did a triple beat. Now, it's not quite often that you have a stock do a triple beat, and yet for the week it's down 13%. And it's not like the stock was at a insane valuation either. We'll also talk about the valuation a little bit more towards the back end of the video. So when we look at the numbers here, one of the key things, total payment volume also increased 6% in this quarter. Now, we're also seeing at the moment the Venmo, which was one of the key parts that Alex Chriss, the new CEO, has targeted as a growth driver for the business. Previously, maybe not as much monetization going on. Now we can see here Venmo is now growing at 20% growth, which is very good. And as that scales up, that'll give more to the revenue growth. Now, this is actually, PayPal is actually the reason why I sold my shares in Block. And they have Cash App, and Cash App numbers were absolutely terrible in the last earnings. And my feeling, the reason why, is because Venmo is growing incredible and taking market share. Now, we'll see if that's confirmed when we get another quarter from Square or Block in the next earnings. But that is one reason why I'm really liking PayPal again at the moment, is that Alex Kress said that, hey, one of the things that I'm targeting is to turn Venmo into a growth beast for PayPal. And that's starting to happen at the moment. They've also got a debit card at last, which is, all these things is what you'd expect PayPal to have done years ago, and it's finally doing it now. So this has been the thing, is that they've had a management team that has been quite slow to do the new stage for PayPal, and we seem to have the new features starting to come in right now with PayPal. So debit card TPV volume up as well, 60%. Braintree total payment volume returning to growth. That was one of the concerns I had last time why I sold, and obviously that looks like it's turning back up into the right direction. And they are launching the ads, so this is another growth driver from Alex Kress, the new CEO. Crypto, I'm personally not a big fan of crypto. I've said it multiple times on the YouTube channel, but obviously, this is something that's exploding at the moment, so capitalize on it. I have no problem with a business trying to capitalize on it. And also, as you can see here, strong H1 raising the financial 25-year targets and EPS guidance, which is great. So when we also look at more checkout features going on with PayPal, Venmo total payment volume growth of 45%. And another key driver, big area that's growing on at the moment, buy now, pay later. I know there's a lot of mixed opinions on it right now, but once again, it's a growth driver. They've got to go for it. 20% growth in buy now, pay later as well, which is great to see them extending into that area as well. So as we look here, branded checkout, that's growing at 5%, which is great. That's a high margin part of the business. In fact, if they can get that to 6 or 7%, that'll be absolutely amazing if they can do that. P2P, that was up 10%, which is great to see. Payment service provider, so that's the only thing that I'd like to see them improve at the moment. You can see here that was previously a great growth driver for them. They do say that has stabilized now, so that's great to see. But we want to see that go up a couple more percent. That's my only issue with PayPal at the moment. Branded experiences up 8%, Venmo up 12%, which is great. So as we look at these numbers here, they're all starting to move up in the right direction. The only one that I do have concerns with still is the payment service provider. However, if they can start getting that back up to growth with the Braintree side of it, I'll be really happy. So when I look at these numbers here, like, they're a good 8 out of 10, which is great, because when I was selling PayPal, I was giving them like 3 out of 10. So really good to see that. Now, what made me feel more comfortable as well is PayPal have gone back to giving guidance on the growth. So this is one thing that made me nervous, because they totally scrapped the revenue guidance. You can see here that they're expecting around approximately 4% growth. Now, what you normally do is you say 4%, but you actually come in with 5%. Let's hope that's the case. So if we get another 5% quarter, really happy. It looks like they've got the grip of the growth back, and the fact that they're offering guidance once again, to me, says that they're stepping up in the right direction as well. And when we look at the guide, you can see here there was a decent hike up on the EPS guide here, and what we see here is still a 6 billion share buyback going on at the moment. Now, that's a great thing with PayPal, is that I think sometimes people forget they actually generate a lot of profitability. When you look here, they've got 14% profit margins. You're throwing off 4 or 5 billion-ish a year. You can throw that into a share buyback. When you're buying back 4 or 5 billion on your market cap, it brings your market cap down by a lot, and that EPS as well goes up by a lot. And when you look at your financial health wise as well, but PayPal has a decent balance sheet. You look here, about 50% debt to equity, which I'm okay with, but the big thing is they've got enough cash there covering off the debt, which is absolutely perfect when you do look at someone like a PayPal. And because of the combination of the growth actually going up faster than the revenue, which is key to point out, and also you have the element of that share buyback on top, the PE is dropping quite rapidly on PayPal. And if you look at PayPal now, on 2025 numbers, you're going to be about 12 times earnings. Now, like I've been saying to you guys quite a lot recently, is that my focus has now shifted from 2025, because we get towards the end now. I'm starting to look at 2026 numbers. We're only about 6 months away from entering 2026. It's not that long until we're going to be there. And as you know, big thing with being an investor is we're not thinking what's happening in the next couple of months. Long-term investors, we're thinking 1, 2, 3, 4, 5 years ahead. And as we start looking at towards a year and a half now, we're going to be about 11 times earnings. Now, I know PayPal has had a few bumps in the road over the last few years, but if you're a company still growing profit, still growing revenue, and you're at 11 times earnings, it's looking at a pretty attractive valuation here. And we've seen PayPal and the new CEO, he is trying to bring in these new features into PayPal, and they seem to be having, the success there. You look at the buy now, pay later, growing at good rates. You look at Venmo, looks like it's doing really well for them. So it looks like some of these new features, and obviously if ads is successful, crypto on there now, it looks like what is getting introduced is starting to have some success when you look at the profit numbers and the revenue numbers. And realistically, I was buying this stock previously at 13 forward times earnings. The fact it's even gone now to 11 times forward earnings, yeah, the growth is slightly lower than where it was, where I previously projected it to be. But that's all baked in now. 11 times forward earnings for a company like this shouldn't really be happening. For a company growing about 5% on revenue, but let's not forget the profit's growing faster than the revenue. The profit's going to be growing near double digits. A company growing profit at double digits, 11 times earnings, shouldn't really be happening. You should at least be probably paying about 20 times earnings for this business. So with that in mind, let's have a look at the current upside, looking at the numbers on PayPal. So looking at the company right now, I've got the top number as a 64 billion market cap, which is right now. The bottom number is with a 10 billion, not million, a 10 billion share buyback continues on the business. 3% revenue growth, 5% revenue growth, 7% revenue growth. Obviously, they're about 5% right now. If they can get to the 7% revenue growth as they accelerate the branded checkout and Venmo keeps improving, obviously, we could potentially get to the 7% revenue growth, which we're aiming for. Put 30% profit margins, which would be a shrinking of the profit margin. 14% profit margin, which is about where they're at right now, and a 15% margin if they carry on growing profit faster than the revenue. And if we look at an earnings point of view, 20 times earnings, market average, I think PayPal should be about 20 times earnings. A company growing at these sort of levels should be about 20 times earnings. Low side, 50%, 49% to 77%. On the high side, 73% to 105%. And on the high side, 100% to 137%. So for me, as an investor, 2 to 5 years, I want to get to about 100% upside. I'm getting that on my high side. I'm getting it on most of my middle side with the share buyback, and 73% on the mid side. And even, worst case scenario, if they do grow at lower levels of 3%, the profit margin is shrinking down a bit, I could still walk away with somewhere between a 50 to a 77% profit margin. For me, that should be around about where the S&P returns. So worst case scenario, I'm still going to be somewhere level with the S&P, in my opinion. That's fine for me. So that's great. Now, at the moment, like we said before, we are seeing profit grow faster than revenue, so that could potentially see where we see the an expansion in profit margins as well. So if Alex Chris is able to drag that profit margin up slightly, so if we just go on the past performance right now for PayPal, so if we look right now, they're sitting around about 14.5% profit margin. If they are able to get somewhere where they were previously, so if you do look at PayPal, they did get to a 20% profit margin, although that was 2021. So if you do go back before that, there were a 15% profit margin company there. And if we see the efficiencies start kicking in, so if we do actually forecast that PayPal do drag the profitability, let's put them to a 16% profit margin and a 17% profit margin, there's a lot more upside there. So the key things for Alex Chris to deliver on for us to have a successful return really is just drag that Braintree revenue up slightly. If you can get those efficiencies, get the EPS to grow 10+% and do the share buybacks, and we see that profit margin just scale up 1 or 2% from here, yeah, I can see PayPal being a really good performer. So yeah, I'm buying a stake back into PayPal. I have got the ambitions to hold it for the next kind of 2, 3, 4, 5 years. And hopefully we get a good return from that. Obviously, if you do get to a point of view where PayPal does exactly what happened last time, where I'm holding the stock and it has that shoot up to $90, $100, then I will have a rethink on it, because I'll get a lot of my upside in a 12-month period, and then I have to think, okay, is it worth holding it for another 4 years for how much upside? So always I reassess it depending on how much upside comes at me straight away. But I am hopefully holding it for the long term, and Alex Chris keeps improving some of these things inside this business, because it looked for a while to me it was getting a bit shaky, but this quarter made me look at it and I thought, you know what, this was actually a really standout quarter, triple beat. And I've given PayPal, like the back end of 2024, I was giving PayPal some tough times in their earnings as a shareholder as well. I was giving them 2 or 3 out of 10 earnings, and especially I think it was the Q4 earnings. I think I remember going like, that's it amount, that earnings is not good enough for me. And now it looks like I'm looking at it and I'm going, you know what? Some of the issues that I had, it looks like they're resolving, and the valuation here is even cheaper when I was buying it last time. So yeah, we'll see what happens, and let's keep an eye on it. So yeah, I have started buying a position back into PayPal. Hope you enjoyed the video, guys. Hit the like button, subscribe if you're new around here, and as well as that, if you do want to see the exclusive content, make sure you hit the link in the description. Apart from that, see you in a bit.